Hello and welcome to the fourth video of the financial market series. Today I'm going to speak about the Forex and kind of all the details surrounding it. So yeah, the Forex, aka the currency market or the exchange market, it's a market characterized by free currency exchange. So you can see Forex, foreign exchange of foreign countries. So both it can be used both in a physical or virtual space. Like for example, you have those type of cashiers, cash exchanges. When you go outside or near banks or something like that, and you like, for example, you have 100 euros and you want to exchange it in dollars or something like that. Or of course, at the same time, you can use it, with through brokers where you can trade bigger quantities, and at the same time, it's actually what it's used, for trading. And since we are trying to speak here from the trading point of view, I'm going to keep it related with that way. Yeah, it's more or less a young market, I would say right now, but at the same time, it's in terms of, if we are not going to take individual company and stuff like that, I would say that it has one of the biggest transactions daily. It's multiple trillions, like 5 to 10 trillions, I would say. So yeah, it can be traded for Monday to Friday, so 24 hours. These 24 hours are divided in multiple sections. We have the London session, the New York session, which are the most important, and then you have the Asia session, which is the Tokyo and Sydney, if I'm not mistaken. So yeah, they don't have the same volatility, but yeah, if you are going to trade, yeah, in terms of the pairs, we are going to have this criteria of the big major pairs, and these major pairs are going to be the US dollar, Canadian dollar, um euro, Great Pound, Swiss crown, Australian dollar, and New Zealand dollar. And every of these combination used with against USD, they are called major pairs. And like for example, GBP USD or Euro USD. And the other ones, like for example, if you trade Euro GBP, they are called crosses. So yeah. Now, like I said, you have different type of ways to trade them. You have the spot, you have derivatives, options, and so on. However, we are going to focus, on the normal retail way, which is using the currency exchange directly. No forwards, no nothing. So yeah, factors that exchange, that factors why what can affect, I would say, better, these pairs. Of course, you have the economic, the most important one, the details of a country like GDP, unemployment rate, consumer point index, so on, inflation, the monetary policies of a country, both from the government and from the banks, especially big banks like central bank of Europe, for example, or something like that. And of course, psychological, like for example, when you see like the 9/11 attack of the 11th of September attack, or look for example this example on 23 of April 2013, stuff like that. So yeah, what's the beauty of it? Of the currency market, they are big. Like I said, we have trillions dollar trade daily. 70 or 80% of that is going to be in the Euro USD pair, if I'm not mistaken. And it's very very important, from the, I would say, the big company, I would say in the government of a country, stuff like that. Imagine you want to import some materials or electronics or whatsoever. Like for example, imagine you are in Europe and you want to buy, some, I don't know, some steel, and you want to buy this steel from Japan. So in order to buy this steel from Japan, Japan is going to tell you that they don't want your euros, they want their yen. So then you have to take your euro and change it into yen, pay them, and after that you can get your material. And this is kind of the way, the transaction worldwide they work. Like they want to buy something in general, they kind of have to change for that particular currency. But at the same time, like I said, the transaction, they can be made very very fast, very easy. All you just need it's a computer. Yeah, like I said, you have a lot of options. The big variety, that you have. So yeah, I would say the most, like I said, the most important part is going to be on the banks and companies, and then of course you have a small ratio of that which is going to be for the retailers. Now regarding the forex market in general, they tend to be size market. You can see that in general it's going to range trade always. You can see pump pump pump. You are never going to have full defined trend. It's always going to go one way or another, like euro gbp for example. The same way, you can see pump pump pump, it's happening. It's going one direction then another direction, and so on, like gbp yen. Wow, gbp, we don't have gbp yen, but you have euro yen, no? GBP, Euro GBP. Like, I forgot, yeah. So you can see, we kind of always have side market. I'm telling you this about side market and trading market because later on I'm going to speak about strategies and tools and so on. I'm going to explain this factor about it. Now, some things in consideration, like how it works. You see, for example, in the stock market, you see these numbers here. Let's go, for example, Euro USD instead. This is called this is the initial price, but this is actually what you paid. This is in the middle is going to be the spread. Spread, you can see it's 0.1 pips. The pip is going to be like 1, 2, 3, fourth part of the price. So in this case it's a tenth of a pip. Or we look like 2 tenths of a, or yeah, 1/10 of a pip, 2 tenths of a pip. So in general, because we are using leverage, and in this case, when we are using big leverages, we're going to calculate this using pips. So in general, the main factor, we are not going to do like in stocks or stuff like that, like, oh, it moved 5% or it moved 10%. No, in general here it's going to be with pips. So yeah, like for example, from this point you can see from, let's take a fixed point, I don't know, somewhere around here. So you can see from here into here we moved like 222 pips, for example, to give you something like that. So then those, like for initially it doesn't look like much, but when you have, because in general most of them they are being traded with big leverages, like maybe 100, even 200 times, those gains can be big, but not so big. Like for example with crypto and stocks, at least for my own taste, taking into consideration the drawdown and stuff. But yeah, it can be made a lot of money, but at the same time I have to say that forex is also the most difficult. You don't have just how it's called, the technical analysis. You have to take in consideration as well a lot the fundamental points. Like for example, you can see here in the news all of these. In general, there are releases that you have to be aware of them, and it's much more difficult. I've been there, I done that, and since I went with crypto, I don't want to change back. But yeah, anyway, depends on each one personality and psychology and whatever they want to trade. So yeah, I know it's kind of scratchy and kind of small, but I like to tend to these parts, because all of them, like I said, if you want to find full details, you can go Forex, full details on Google, and you can find hours, of history and stuff. I just like to give you, the surface, so you can understand at least, what they are, and after that, go to what I believe is the most important part, which is going to be the technical and fundamental analysis. So yeah, I hope you enjoyed, and see you on the next video, which is going to be surrounding the cryptocurrencies, and the last one from the financial markets. After that, we are going to start with the analysis. So yeah, thank you for watching.